Hello and welcome to Canada CPA Online Academy, sharing the wisdom. So we have been discussing the Canadian auditing standards, and if you're new here, you can check the playlist for the Canadian auditing standards. Especially these are required to be known in depth if your role is assurance for day two, so that you can quote the specific details from the CAS in your to achieve your day two role depth. If you're new here, please like, share, subscribe to the channel. I post regular CFE updates for the CFE preparation and other things related to CPA, career, and jobs, and such other things. So let's get started. So today we are discussing CAS 265, communicating deficiencies in internal control to those who are charged with governance and management. Now, if you have seen the previous CAS video, that talks about communication with those who are charged with governance. Now, this is a general standard, and this becomes specific with internal control. So, 260 talks about overall communication throughout the audit process. It could be from planning, scope, internal control deficiencies, and other matters. But this standard specifically talks about communicating deficiencies and internal controls. Now we know that in an audit, we are expressing an opinion based on the information provided by the management. So the responsibility of implementing the internal controls and avoiding the material misstatements from the financial statements always lies with the management or those who are charged with governance. But this, while in the process of audit, when you're checking the internal controls, this standard specifically uh, points out if you find any difficult deficiencies in the internal control, how you should address that to the management. So, as usual, the CAS starts with the scope, the objective definition, and the requirements. It is pretty small standard, but it is an important one. And in the application and other explanatory matter, you will find that they have given some specific examples on what are the deficiencies and why they matter and how you can address those. So let's see the scope. The scope of the standard is or with auditor's responsibility to communicate appropriately to those who are charged with governance. Now, in the previous CAS, we have seen how to define what is the definition of those who are charged with definitions. You can refer back to it. But to sum it up quickly, it could be depending on the entity and the size of the entity. So for smaller entities, it could mean just the owner manager who is looking after the financial statements. And in bigger organizations, it could be the board of directors if they have specific audit committee. But this goes a little bit further in that scope, that you have to report this internal control deficiency to the management who is responsible for implementing that control. So it has a little bit wider net from the previous standard. Previous could be a little bit smaller group. Here, you may have to need to the next level of management who is actually responsible for implementing the controls in that department. So a little bit wider scope, just take a note of that. Um, Now, what are internal controls? We know that internal controls are the policies and procedures that are implemented within an organization that help to prevent or detect the errors. Always remember that prevention is our first requirement. That is the first step, that it should be prevented. The system should be formulated such as the misstatements, errors, or frauds are prevented first. If that step is missed, so if it's not prevented, then the next step is it is detected. So that it's a multifold aspect of internal controls. Now, it entails understanding how they have designed the internal structures, because in smaller organizations, it might be sometimes difficult to have that segregation of duty or that separation of internal control because of the smaller number of team. But in bigger organization, it has to be followed more meticulously, that the segregation is followed, proper procedures, controls, even in the information system side, they are in place with all the access, logins, approvals, and all that system. So it includes all that structure. Now, it is important. The first step is understanding what is the structure. Then second step is what are the what is the assessment procedure? How do they monitor those controls in their organization, and how they report it back or correct the errors or correct the deficiencies? So that is what is the scope of this CAS. Now, as stated, the auditor is required to obtain an understanding of the internal control system and identifying and assessing the risk of material statement. Now, remember, the overall objective of the auditor is to express an opinion on the financial statements. That depends on whether there are material misstatements in the financial statements or not. And material misstatements are very much linked to with your internal control system. So there is a chain, understand always that chain. So based on that, we are doing the risk assessment and the designing the design of the audit procedures. So that is the audit procedures, risk, materiality, evidence, and the final opinion. Everything is linked with your internal control process assessment, and the efficiency actually. It's not just important to have those control, it is important to assess whether they are performing effectively or not. So that is the scope. Now, uh, what is the deficiency? So they define deficiency, that deficiency exists when the control is designed, implemented, or operated in a way that it is unable to prevent, detect, and correct the misstatement. So as I was saying, the first objective is prevention, and then if it fails, then the next thing is detection. So take an example. Suppose uh, there were the entities issuing checks. Okay, so what are the controls for issuing checks? Are there separate segregation of duty based on the person who writes the check, the person who signs the check, and what are those controls? Are there any double signatures required? What is the amount of checks authority that you can sign? Say up to 50,000, this person can sign just on one signature. Above 50, two signatures are required, and things like that. Now, all these are put in place to prevent a material, not this is not this would be misappropriation of funds. In case the check is if there is one person who issues and signs the check, it would be misappropriation of fund. Possibility of it, I'm not saying it would be misappropriated, there is a possibility in that system. So if there is not a separate segregation of duty, then you will have to report that. If there is, then what are the checks that the company follows to identify whether all these procedures are followed or not? Do they have an internal audit department? Do they have someone who regularly checks all these controls are existing, operating effectively or not? So all that is required, and these controls need to work on a timely basis. So it should not be that if something has happened, inventory has gone missing, and you find it out 2 years later, then it does not save the company's loss of the financial assets. So it should be like there should be a monthly audit if there is a huge inventory, or quarterly audit if it's a uh, smaller entity, and things like that. So it should be on a timely basis. That is what they are emphasizing. Now, what are the requirements for this standard? So the requirements is the auditor shall determine whether on the basis of audit work performed, the auditor has identified one or more deficiencies in internal control. So they're saying one or more. And then another thing they say is on the basis of audit work performed, whether individually or in combination, they constitute significant deficiency. Now, suppose say in an inventory, you say there is like ABC type of items. Now there they have, suppose for high value items, they have stricter inventory controls, but for smaller items, suppose nails or some miscellaneous hardware parts and things like that, they don't have those strong controls. Then it might not have that significant material financial misstatement if something goes missing. But if you find that there are number of multiple such smaller inefficiencies in the control, then totally it might impact the financial statements. It might become material based on, so individually if a nail or two goes missing, it is not material. But like if that the C class of items is such huge, like, and then there is no control on those type of inventories, then in combination there might be something else that is happening, or some there might be an financial impact. So that is why they say that individually one process might be in defect, or there are several processes that have some smaller defects which in congregation may have a material misstatement that is occurring in the financial statement. So it is defined in both ways. Yeah, so one or many together may indicate failure, and the significant could be based on the impact on the financial statement. Now, what you should include in the written communication? Always this should be a written communication once you conclude. So you have to write the description of the deficiencies and explanation of their potential impact. So what is missing in the internal control? You have to explain, and then explain because this is missing, what would be the impact on the financial statement. So as in case of check signing, we say if there is no segregation of duty, then you should explain what happens if there is no segregation of duty. Now remember, you are not declaring an opinion in here. You're just indicating that it may happen. Okay, so this is not a opinion expressing communication. So you're not expressing an opinion, you're just reporting the matters of deficiencies in the audit in the internal control system. So that's it for this standard, and they have given some details in the significant deficiencies of internal control, some detailed explanations. So like examples of matter that auditor may consider in determining whether deficiency or a combination of deficiency in internal control constitutes a significant deficiency. So what does that mean? So the likelihood of definition leading to material misstatement. Okay, so as we discussed, if there is no separation of duty, it may lead to misappropriation of fund. Then if there is a susceptibility of loss or fraud of related asset or liability. So if there are no inventory control procedures, then there may be loss of asset. Then controls over the prevention and detection of fraud. So as we discussed, there may be procedures in place, but there should also be a monitoring system in place, whether those controls are operating effectively, and that monitoring should be there in the place. Then controls over period and financial reporting process. What is the financial reporting process? Who passes the non-recurring journal entries? Who has the access control? Now, this may include your information system as well. What are the controls for the approvals? What are the system logs? Have they like whatever the internal control procedures are actually uh, in existence, are they replicated in the system or not? So like in process, if you have the segregation of duty defined, but in system, if you don't have that access segregation, if everyone can approve everything, then it fails. So it is, everything is interlinked, so you're reporting everywhere, reporting based on your findings considering all these aspects, and then it is communicated in writing in a report format to your uh, those who are charged with governance. So that's it about this standard, and let me know if you have any specific questions on CAS or any other matters. Please like, share, subscribe to this channel to get the regular CFE updates. I post the weekly videos for CFE preparations and related to CPA, job, career, and other matters. So thank you for tuning in today, and we'll talk to you soon. Thank you.